Guys, I was just going over a trade that I did this morning in Oracle, right? I was doing that for the VIP Trading Club members, and this VZ reminds me of that trade. I want to show it to you here. Let me grab my pen, okay? And you see this gap here, right? So Verizon closes here yesterday, and then it opens here, okay? Now, any any move up into this gap area, the gap area is going to usually serve as some form of resistance. So if we isolate that gap area, here's the gap area. If we just isolate it as a big giant zone of resistance, okay, this can lead to some really nice entries. So look, you've got the overhead 200. So you've got the overhead 200 period moving average, which is a zone serving as resistance. You've got the declining 20 period moving average serving as resistance. And you have the gap zone serving as a zone of resistance. And so you're coming into this resistance area. It's filling the gap. All right. And it's just a great, it's oftentimes a very great opportunity to get a short off. Now, the reason why gaps tend to serve as resistance a high percentage of the time is because that's when what happens. What has happened when a gap gets filled? What has occurred, all right, when a gap gets filled? Can anybody guess? Okay, Benjamin's saying longs get caught. No, not really. Think of traders that had Verizon from yesterday. All right? So they have Verizon from yesterday, and it opens, and they're an instant loss. That's right. They're an instant loss. But then the gap gets filled. They get their loss back. What do you think their next action is likely to be when a part or all of their profits their loss is recovered? That's right. That is why gaps are support if they gap up, but they're mostly resistance if the stock gaps down. So on my play with Oracle this morning, take a look at Oracle. That's what I did. You see the gap? So here, look at the gap. Here's your gap. All right. Now that green bar doesn't exist at the open. You see? That green. This is where this is an instant painful loss for anyone who was holding Oracle from yesterday. But Oracle bounces. You see that? It bounces to practically fill the gap. And then what does it do after that? Now, sometimes you can see this clearer on bigger time frames. Take a look. So you see the gap? See the gap, move up into the gap, fill the gap, and then collapse. All right? And there's a lot of things, guys, that do that. It's something that I want you to be cognizant of, right? Let me see. And it does work in reverse. So gaps to the upside will have a tendency to serve as support. All right. But I do find that the gap down, when you have a gap down, the stock that gap area above the stock serves as stronger resistance than it does on the reverse side. So resistance is stronger than support. It's still good, but it's stronger than support. Yeah, so I can't find another too well here, but it's an interesting Intel. Yeah, Intel was one this morning. Yeah. So, well, Intel was more of your, this is like my bread and butter play. Fat red bar. We move up into the fat red bar, right into the 200, and we collapse. Now, I was explaining to a trader in the VIP who took this trade. So this trader dove into the red bar, also added on the move up, okay? And I think he added again here or something, but he didn't take a profit here, and the stock winds up stopping him out. Now, the problem with this is that our trader didn't incorporate the gap into the play. So you have to incorporate the gap by filling it in your mind. And you have to say, is this whole play big enough to take a profit down here? Now you might be thinking like, but I got into it here. All right, that's not a big profit for me. The stock doesn't know what's a profit for you. It doesn't care what a profit for you is. But I will tell you that this is a big move when you incorporate the gap. So when you have a sizable gap, traders, and you go into that sizable gap, you can't expect a whole lot after that because the gap has already accomplished a whole lot. Does that make sense, guys? That the gap already made the stock oversold, and so you have to be a faster profit taker. Do you understand? When your gap is sizable, you may not be able to wait for 3 pushes because the gap has already sucked up a big portion of the stock's potential move. All right. Yeah. But I can see how that was a little bit tough there. All right. And what did MU do here today? See, I know some traders of mine took this short here on the tails. See the double tails? So boom, they take it short. You got a little tiny move here. But when you incorporate the gap too, you know, there's your move. And these are warning signs. No follow through on red, so many. Like red, no, not ready yet. Red again, no, not ready yet. Red again, no, not ready yet. No follow through reds are a warning sign. All right. Double tails on AMAT today. Yeah, that actually, they didn't work today. That didn't work. No follow through. Again, guys, you see these reds and then no follow through? Like when you get this and then this, right? And then you get it again like that. And then something like that. Your market is telling you that it does not want to drop anymore. That reds, even solid ones, have no authority. Red, solid, no authority, right? Red, solid, no authority. It's a warning sign here, you know?